All right, guys, good afternoon. Welcome aboard to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Doing the video from the office today. That means no webcam. Really, the meat of the stuff is right here on your screen anyway. So here we are, 5 p.m. Eastern Standard Time. That means Aftermarket Recap. Let's go ahead and get started. The Dow closed up 27 points, pretty flat, 33,336. NASDAQ fell about 0.58%. S&P 500 closed flat, down 0.07%. VIX above 2020. Equal weight S&P did better than the regular S&P, 0.44%, since that's skewed to more tech. Small caps keep outperforming S&P. Take a look at that, 196.35, up 0.37%. The dollar came down slightly, but bounced 105.13. 10-year yields continued to roll higher. Went ahead and posted a tweet on that, 28.88. Thank you, sir. Take a look at the 20-year bond ETF, TLT, down 2.33%, 114.39, still holding that. High yield credit, 78.24, down 0.57%. Investment grade, 112.93. Crude oil, that's something we're going to look at today, 2.24%, closed a smidge below 94. Gasoline futures fell 0.52%, $3.05 a gallon. Bitcoin, 24,245. Ethereum, 1,905. Looks like the March to 2,000 continues to roll. If you guys remember, we did buy, Kevin, did you remember when we got into Ethereum on that dip that we put on Instagram? I think it was what, at 900?
1,800?
No, when we bought Ethereum, it was at 900.
900. Oh,
900.
Yeah.
Yeah, it's at 1905 now.
Yeah.
So well done. More than a bag, right? Just a little over a bag on that Ethereum position. Pretty cool. Pretty cool. Congrats if you bought it. Sometimes you do get lucky, right? Sometimes be better lucky than good. I'm kidding. Feel free to take a look at that buy. I'll go ahead and post it later today so you guys can see the analysis. It was a log chart from Bloomberg, or on the Bloomberg platform, that I went ahead and did. I don't have logarithmic charting on TOS, or maybe I do and I haven't found it. Either way. Okay, so pretty much the action today. Let's go over some macro together. Always fun. We'll go ahead and start with crude oil. And again, crude oil, I did post a chart on it. Let's see if we break 95.18 so we can start kind of easing our way back into energy. Remember, I did sell that Chevron shares for about 10% gain. Nothing really exciting, nothing to get excited about. But let's go ahead and take a look at the daily and why I'm waiting for 95.18. We have a cross, or pretty much a meeting, between the 20-day and the 200-day. 20-day being a nice short-term suggestion or indicator of where the market's going, but we rejected it. We rejected the 200, and that's where we are. This blue line here is open interest, so don't pay that no mind. I'm going to go remove that. And again, I put this highlight here because we did break out of this trend line. You can see the trend line, and I had my support here at 85, and 85 being this level that we broke out of back in January of this year. So again, I do like oil if we can get to 95.18. I might do futures. I might do just maybe like kind of an ETF or so that I can trade. And then my target would first be 98.71, and then over here to around 105. That's the 100-day moving average. Again, it would be nice for a scalp if we could trade futures. This futures contract for oil today, it actually expires next Friday. So maybe if we can hold out where we are now, we could possibly get a trade in for next month's expiry. And futures chat will be updated with that as we go. Let's go ahead and take a look at the 10-year. And the 10-year, we talked about this, if you guys remember this morning, kind of that shoulder, I guess you want to call it here, the neckline. This is really the neckline, but the shoulder line, if you guys want to call it, looks like it's a retest of that shoulder line. 2.906 is the level. We're at 28.88, so 2.888. Nothing really to do here. Again, pretty much a little consolidation between 26 and 28. That's where we've been. Kind of flirting with 29. More than likely, we'll probably fill this gap, possibly reject and go lower. I expect lower rates moving forward. If the Fed does do 50 basis points or less, I see TNX falling even more. So again, unless we get 100 basis points, which I doubt with this last CPI that we got. Maybe the Fed kind of pulls back the pedal, but still increases rates. 75 basis points is still a lot, and we got that twice in a row. The dollar, again, kind of that trend line, kind of that magnet. We break out of it, we kind of test, and it's lower and lower and lower. So again, look at the daily here. Got a nice little trend line created, and really the level I'm looking for is right around 104. If we start breaking down below 104, that's when it gets really interesting, and that's really going to boost equities moving forward. So again, we want the dollar to go down because the stocks are priced in dollars. Here's the other side of the coin. Commodities are going to go higher if the dollar gets weaker. Take a look today. The dollar was pretty flat, but again, that did hit gold, that hit its silver, but crude oil did okay. And you can see the dollar being relatively flat kind of got us a flat S&P, usually really because of the NASDAQ stocks, tech stocks being so weighted on the S&P. If we guys remember on a weekly chart, again, kind of the same deal. We're at 105.13. We had this nice trend here to 109.28. We reject that. We should get to around 100. That'll get us 61.8 Fibonacci retracement based on the last move up. That'll get us to right here. And that's where I'm expecting this short term, at least. Let's go ahead and take a look at the volatility index. That's the VIX. We talked about oil. And let's take a look at the hourly on VIX. We'll take a look at the daily, excuse me. Again, the trend line has been broken. We're now at 20. The kind of the rule of thumb is that below 20 is very bullish. Again, having that bounce back here just kind of confirms that that 20 level is a key level on the volatility index. So not a lot of fear out there, obviously up 2.33%, hence why we were flat. SPY, I put this chart on SPY because I am in this trade. So let's go ahead into the 4-hour chart. And it's very simple. We have 2 points of resistance that we broke out. And then we have our next 2 points of resistance. End of April into beginning of May, and now we're here. Now the target I'm looking for is 425.51. We did wait earlier in the day, even post CPI, to right around here is where we bought. Right around 421, we were holding that 20. We slipped down, a big volume bar there, bulls and bears fighting, and then we bounced back a little bit after hours. This is SPY. So again, we expect to get to above 421.42. Our real target is right here, 423.68. I bought some time. It's for next week. So again, really my target for upside is 425. Hence why I have the 425 strike calls for next week. That's what I have. But if we're looking at bigger picture on the daily, really 430 is really the last straw for me. I think we reject 430 or we get very, very close. And then we're going to have to start retesting some levels, guys. We got some gaps we got to fill. We'll fill this 413 gap as well. We'll probably retest 4,000 at 409. Again, maybe in September with a weak seasonal approach, weak seasonal history of the S&P on that month. And of course, as we get closer to midterm elections, again, expect volatility to increase regardless of political affiliation. That's just the way it goes. So again, that's something you need to be cognizant as a trader. So again, I do expect us to get to 425.40 on the actual daily, get us to the top range. Just kind of recheck back to 424.95 as I expect us to get to 430. And then after that, again, if we break above 430, fine. But that's pretty much my level to start shorting and start scaling back any kind of longs in terms of swing trading. So again, we're kind of getting a little bit of room. We got $10 of SPY to play with. If you're talking about support, again, I have 418.13. That was that breakout level that we got pretty close to here from the previous bubble that I had. You could take a look at the daily. Again, it all really lines up pretty correctly. 415, 416, we got above that. So I'll use 418 as my support. Next big support on the daily is right around 409.93. Yeah, I would hope that we don't get there if I'm holding longs. I would actually want to cut that, obviously. But I'll keep an eye on 418. I think this dip gets bought. I think we still have more room to the upside to 430, and that's pretty much it. But if we break above that, let's just say we do, with really good news, really your target now is going to be 431.98, which is the 200-day moving average. If that does break, well, then we're talking 450, 445 possibly. And I would be extremely surprised if we got all the way there. I don't think we will. I think we'll start retesting. 409 will be in place, possibly 403. Would I want to go ahead and just go all in on some puts? No, but right around 430, I'm definitely positioning myself for shorts. Okay, let's answer some questions. Belligerent's asking, hello, thoughts on HRL and SYY with latest food CPI print? I could do the charts on it because I don't know much about those companies in general. SYY was just Cisco, again, pretty much flat. You're testing the 200-day moving average on the daily, usually a pretty good spot to hold support. I don't see a lot of edge here if you want to trade it. I don't know what their dividends are. Hormel Foods, again, lower inflation is a good thing for these kind of companies because now it brings profitability back. Now we're going to get better margins. Again, a lot of these names have pricing power. Walmart has pricing power. They can, raise their prices or such because they can buy in volume. Costco does the same. So Hormel, being a distributor, with having lower raw commodity costs is going to save them money. So again, and this is a good thing if we can continue getting commodities to go down. In order for commodities to go down, we need a stronger dollar. If we have a stronger dollar, it's because the Fed is raising rates. So again, let's see how much inflation could go down. That's really the bet we're looking for. I'm closing a swing on T-Mobile when SPY hits 430. There you go. That's a good idea. Thoughts on the CVS chart? That's Jorge. Let's take a look. CVS, we do have a gap to fill. Jorge at 96.55. You don't need to worry too much, but we just filled one gap here at 104.87. Would I be a buyer here of CVS? I think CVS is a great company to own long term, same as Walgreens Boots Alliance. They're pharmacies. We got baby boomers that are older. We know the drill. Prescription drugs, Medicare, all pay, all money. So again, cash flow for CVS is strong. WBA as well. So again, that's a company you want to own. They pay out dividends. In terms of just trading some edge here, really, if anything, you're looking for this gap to fill at 96.60 and then a possible good idea to reload there. If we expand this out even more on a 3-week chart, if we can go ahead and remove this Fibonacci level, because that needs to be redone. Again, very nice price action to the upside. Probably outperforming the S&P this year. Yeah, it is outperforming the S&P. So CVS is nice, not tradable, I may be honest, but ownable, absolutely. I would wait for maybe sub 100 if we get small pullback. I wouldn't rush and buy CVS today. If you're the type of person, Jorge, that just wants to get at least some exposure, I would at least do some dollar cost averaging. I bought some more SPY-G today. I buy it every Saturday. As you know, I buy crypto every week. Same old deal. But good stuff all around. We'll go and leave it there, guys. Have a great rest of your afternoon. I will catch you guys tomorrow for the morning note. Make sure to hit that like button. If you like these videos, masterclass lifetime signals expiring September 1st. So don't forget, if you do want to sign up before September 1st, that's the day you're looking for. And I agree, HRL is going to do well, lower inflation. Plus, they released a new operating strategy the market liked early this week. Very nice. I like to hear that. If belligerent, you're making money on it, I'm rooting for Hormel. Definitely. Have a great rest of your day, guys. Cheers.